In this video, I'll be breaking down the exact actionable steps you can take tomorrow in order to make between $500 to $1,000 per day trading Forex.
All right, guys, so let's get into it right away. Step number one, basically what type of trader and person you need to become and what type of mindset shift is required in order to achieve the goal of us making between $500 to $1,000 a day and much more. So basically what we need to see is we have two types of traders here. We have trader A and trader B. First, I will show you guys what is trader A and what is trader B. So trader A is pretty much an unprofitable guy who's stuck in a vicious cycle like 90% of forex traders are, keeps on buying accounts, keeps on blowing all these prop firm accounts, keeps on depositing money in his account and just keeps blowing it up. And basically one of the main reasons why he's like this is because of his focus, and he is primarily only focused on the amount of money he's making, the amount of dollars he's making, and wanting to flip accounts really fast, wanting to turn his 1K into 10K as fast as he can. And what happens to people like that? Well, the forex market will eat you alive and spit you out is what is going to happen. Now, if you are this guy or know somebody who is this guy, you don't want to be this guy. Instead, you want to be trader B. Everybody wants to be like trader B, who is a profitable, happy trader. That's why he has a happy face. This guy has a sad face, and he's got a whole bag of money in his hand too. Now, to become this person, trader B, who we all want to be to make the 500 to 1K, right? What you have to do is you need to shift your focus. That's why I said mindset shift. Go from remembering that you are not a gambler to remembering that we are risk managers, and primarily focusing on these things right here, which is instead of focusing on the dollar amount, the money, the flips, focus on what your risk reward ratio is, what your win percentage is, what is proper risk management, what is journaling, and how to go back and really deeply look at your trades and learn from them, going and back testing trades, having an exact set morning routine. That is what determines a profitable trader and an unprofitable trader and a profitable trader, the difference between them. So if you want to stop being this guy and become this guy, start focusing primarily on these things and have that mindset shift that this part right here, the money part, will take care of itself. If you can take care of these things right here, money is just a byproduct and it will definitely come. So that is the first step, is to determine what type of trader person you are and what type of mindset shift is required. And you'll have to be really honest with yourself. You can't be lying to yourself. Be completely honest with yourself. See who you are. See if you see yourself in this guy. And I just gave you the solution on how to become this guy. Is focus on these things mainly. And yeah, and that is step one. So let's get into step number two. All right, guys. So step number two, which is how to gain access to the capital you require in order to make between $500 to $1,000 a day. So there are two ways to go about it. First one is personal capital. If you have enough money, then basically, and you need to be an experienced trader for this, you can put 5K in your account and risk between 5 to 10% per trade in order to make around $500 to $1,000 a day. 5% of 5K is around 250 bucks. And if you're doing an average risk to reward of 1 to 2, you're making around 500 if you win the trade. And if you're risking around 500, you are making around 1K. So that is one way of being able to make 500 to 1K on personal, risking 5 to 10%. Now, this is not for newbie traders. If you're a newbie, stay the fuck away. Only maybe put like 50 to 100 bucks in your account, risk 1%, and it's just practice right now. Don't even think about all this, right? But this is for experienced traders. You can put 5K in there, risk between 5 to 10%, 1 to 2 risk to reward, and that's how you can pretty much make this much per trade daily. Now, for newbies or even experienced traders, the other way is, this is the actual hack. This is called maximum leverage. Is you go buy a prop firm account, which you can get as low as, like, I got prices for you right here. 50K is for 130 bucks. 100K is only $350. So go buy one of these prop firm accounts and pretty much only risk between 0.5 to 1% per trade. So let's say if you go and get a 50K account, 0.5 is around 250 bucks, same thing as this. And then 1% is around 500. And that's how you can do the same thing, which is make between 500 to 1K. And here your risk is way reduced because this is not your own money. This is prop firm money that they will supply to you once you pass their evaluation. Now one of these 50K accounts only costed 130 bucks. So look at the risk to reward on this. You're only risking 130 bucks. Now let's say even if you don't pass on the first one and you pass on the third attempt, you're still only at around how much? Like 3 of these will cost you 390 bucks, 50K, right? If you can win a couple of trades in a row and get one payout, you're pretty much gonna, even if you lose 2 accounts and third one you pass, you're gonna make all your money back plus more on top. So this is the ultimate way of growing your capital, is by going and getting leveraging a prop firm and risking 0.5 to 1% per trade, and then that way you can make 500 to 1K per trade. And once you are making enough money and getting enough payouts, the route is to dump all this into your personal, and then you can continue trading your personal along with a prop firm. That's the best route to go about it. So this is how you can gain access to the capital. And if you don't have this type of capital, you can start off with prop firms and eventually you just dump it all into your capital, into your personal account along with the prop firm, and basically build more and more capital. And that's how you make $500 to $1,000 per trade per day, or even more. So that was step number 2. Now let's get into step 3. Okay, so here we are, the final part of the video, part 3 that everyone's been waiting for, the strategy. So without wasting another second, let's get right into it. Now, there's all types of different strategies out there. You have support resistance, ICT, some people use Fibonacci. The one that I personally am using is called supply and demand. Now to break it down, basically how I use my strategy is in this way. We use the market direction, we use the higher time frames, which is the weekly, daily, H4, and H1 to determine the market direction on which way we think the market is going. And we also use these higher time frames for targets, for zones where we think price is going to go to. And then basically what we do is we scale down on the lower time frame, the M1, M5, and M15, and try to find trades in line with our higher time frame bias and targets, and find our way down to those targets on the lower time frames by looking at the most relevant supply and demand zones in the market. To put it in a nutshell, that's pretty much the whole strategy. Now we have to determine one thing, which is to determine direction. You need to know price is always either going from supply to demand or from demand to supply. We just need to know which one is happening right now, and that's pretty much it. If you can determine what is happening right now, if price is going from supply to demand or demand to supply, you can go on the lower time frames and find your entries. So without further ado, let's get into the charts. So what I'm going to do is I'm going to be basically showing you guys a trade that I took, and then pretty much taking it live, and well, not live, but like back testing it live in front of you to show you how I determine the market direction and bias and pretty much the entries and everything. So let's start off on, what we do is we always start off on the higher time frame. We're going to start off on the weekly, and we will use the higher time frames for direction, as I said. So on the weekly, we will go mark our areas of supply. This is the first supply that I see closest to price we start off with, and then let me put it like this so y'all can see it. So this right here is the first supply that I see, and then this right here is also another supply. Now the difference between this supply and this supply is that the higher probability supply is the higher one, and also the one where the whole push started. So we can see that this push started right here all the way down. So this area is called the true supply. Price always makes its way to the true supply and then to the true demand. So we can see the true supply was up here, which gave the push. If you go to the left, you could probably, well, yeah, you could see prices coming off something here. Like right here, if I go, you got weekly right here, see? So price is always going from true demand to true supply. So currently we are making our way back up to this true supply. And right now price is at another supply zone, which is right here. This one right here. But price will use this area to just give a reaction and then break it and continue its way up to the true supply. So right now we just need to keep in mind that we are at a true supply zone. But overall, on the weekly, we are still bullish, making our way up, right? Now we go down to the, also one more thing to keep in mind is once that area is touched, you just remove it. I'm going to keep it here for now, but later on I will remove it. Going on to the daily, we can see that, let's remove this now. I don't really see much on the daily. I don't see any demand zones. I mean, the only one that I can is this one right here. It's daily demand, but as you can see, price is actually using it currently and going to the upside. So that's one thing that we got to keep in mind, right? So we could see where price is coming off of right now. We are overall bullish on the weekly. On the daily, we're also bullish, and we can see the price is using this daily demand and is going to the upside. Now, that is what is happening to price right now. We're coming off of this daily zone right here. Let me write daily next to it so you can see. And how we determine market direction is on the weekly, we're going to the upside towards this zone. Right, weekly next to this. On the daily, we can see the market came down into this daily zone and is now making its way back up. So now we're going to scale down to the lower time frames. So currently we are just knowing like our bias, and our bias is pretty much bullish. And now it's our turn to look for targets on where price can go next, right? So on the H4, I would love to mark this, but we can't because this is already used. You can see if I mark this, the price already came back into it, so it cannot be marked. This one we cannot mark because price is added right now as well. So let's get rid of this as well. Now in terms of demand, let's mark our demand zones first. So of course we got this H4 right here. This one is not used yet, so we can mark that one. We have this one, and then we have this one. So currently we can see that there was a daily and a H4 both in confluence, and this is where price is coming off of. So we can expect a bullish move continuing to the upside, right? Now, and we also have a new H4 that got created right here. These zones are used, but I'm keeping them here just for reference to remember where we're coming off of. So now let's go down to the H1. We are still looking for a target. And then, so there you go. That's our first target right there. This H1 zone right here, because price is pushing off of this area, and we have an H1 here as well. Look at like how strong this area is, right? So this zone had the daily H1 and H4, everything right here, and that's where price is giving us a reaction from. So now we can expect price to continue this bullish push to the upside into the next target, and the next target for us. First target would have been this one, but price already is breaking past it. So the target after that is this H1 right here that I mentioned. So current target for price is going to be this H1 up here. Now that we have our target and we know our direction, which is bullish, and our target is H1 up here, we will go down to the lower time frames, M15, M5, and M1 to look for our entries. Right, so wait, this is Toronto time. There you go. Wow, why is it 9:45? Should have been 9 a.m. Okay, let me just do this. So yeah, because we come in at 9 a.m., right? So I actually sit down at 8:30 and start my analysis then. So now we have our target defined, which is H1 up here. We know price is coming off of this area. Now what we will do is we will look for areas of demand because we're looking for buys. We're going to look for areas of demand that were created in our session or previous session. So right here, we can see this is the London session, by the way, from 3 to 6. So we have a M15 demand zone right here, right? And then currently we had this demand zone right here. We could see that this pink zone is pre-New York. We can see how price came into this zone and is using that to go to the upside. And currently, let's go on the M5. On the M5, we have this zone right here, which was created during pre-New York. So we have two setups either. We actually have more than two setups, but the two main setups that I use is previous session setting up our session, or our session setting itself up. In this scenario, we already know the bias, which is bullish. We already know the target, which is this H1 up there. And now all we look for is our previous session to set us up, or our session. Now our previous session in this scenario is setting us up. We have an M5, go down to the M1. We have a M1 right in confluence with this right here. So as long as we have two time frames in sync, that is more than enough confluence and confirmation for us to automatically put a buy limit right here if price can get down to this area with within our basically within our session, right? And then final target for price is obviously going to be all the way up here, but I don't know if we're going to hold up till there, but let's give ourselves like 1 to 2 at least, right? So now we're just going to put a buy limit. First, let's first 1%. And this is an automatic buys. Now, the other way that I could get buys is once 9 a.m. starts, and if we make a new area of demand during our session that is breaking some structure to the left, we can use that to continue the move up as well. But it has to be multiple time frames, right? So right here, let's start this off. It's good software, very nice software. So it shows you the market live. Okay, so we start off the session. Right here is 9 a.m. Again, we're only looking for buys. Start out the session. You can see I'm going to slow it down a tiny bit. So if our session, which is New York, can make a new area of demand here, then we can look for more buys, right? Speed it up a little bit. And we only trade till 11 a.m. If the entry comes after 11, we're going to stay out. We're almost coming to the entries. Now for me, for my stop loss, I don't actually put a hard stop. For most people, I would recommend putting a hard stop, but for me, I have enough experience to know when to close. Because a lot of times price can come into your zone, wick you out, and then just continue up, right? I think that is what happened during this trade, but so there you go, we're in. Now, one thing I do is when price gets to a 1-to-1, I put it to break even. This is literally my whole strategy that I'm giving you guys. Once we get to 1-to-1, we go break even. At 1-to-2 is when I put my stop loss to 1-to-1. And then once we get to 1-to-2.5 or 1-to-2.2, I trail the stops. As y'all can see. Now, there was a lesson here that I learned that I'll tell you guys in another video. But we'll see. This new thing that I've noticed, if I was following it more to the T, I wouldn't even get this much drawdown. Most times it just touches and reverses, right? But in this scenario, we had a bit of drawdown. And I remember price took a minute to come back up. Price was wicking my stop loss. I'll wait for a candle to close below the stop loss. A body closes below. Once it closes below stop loss, that's when I close my trade. But if it doesn't, then we keep it open. So I remember what was happening here. Y'all can see it was like accumulating right around the London zone. And then we finally sort of making our way back up. I was in this trade for a while, I remember. And then, okay, so as you can see, finally making our way back up. Even my take profit, I don't put it, everything is done manual. I just use the risk to reward tool on here. So you guys see, we're finally making our way. And I'm gonna slow this down because right here is when I actually personally just closed here. But according to my rules, what I should have done is I should have basically price here, and then at this point in time, I should have put my stops to break even because I was in a meeting at 12. I remember, and this happened right at 12. Yeah, literally. So when I got to 1-to-1, I just closed it. If I wasn't busy, I wouldn't have closed it. I don't put a TP, and then you continue holding it. Right? You continue holding it. Once it gets to 1-to-2 is when you can move your stops like up more, you know. Yeah. So, but anyway, I'm gonna close it right here, and then I'll show. This is what it takes to actually get an entry. This entry was not the best one. A better entry would have been getting a entry confirmation off of the London zone, which I will show you guys. I'll make another video on entry confirmations. But this is pretty much how I caught this trade this week, actually on Monday, and this was the target. And if you guys want to see ultimately what happened, was price went almost to target, close to target. Sometimes it gets close to it and reverses, but eventually, like you'll see, like let me next date. Well, we don't have next date, but it basically pretty much went above this, way above this. So this is how you take a trade. This is my strategy that I use every single day to make $500 to $1,000. I broke it all down in front of you, from our directional bias down to our targets, down to the entries. Everything was done right in front of you. So if you want to learn it more in depth, you can always message me. And then also I'm working on a playbook that I'm making right now. I'll give you guys a little sneak peek of it, like right here. This is not the official one. This is just like a very rough one. And I will be, I give it to like a designer to make it better. And once it's done, it's going to have my entire strategy. And then again, I'm going to be putting tons of content on my YouTube. So you guys can always go and watch all that as well. But yeah, that's it for the video, guys. If you guys stayed till the end, I would like to thank you very much. And also, if you can go like and subscribe, leave a comment down below, and let me know what you guys think of the video and if anything I could do better. So until next time, thanks a lot, and I will see you guys in the next one.